So hey guys, today I want to talk about liquidity and how you can spot it in the market, get the best positions you could ever get. I personally use this footprint chart as a confirmation on 15 range candles, and I trade the SPX. So the first example I prepared for you was yesterday's evening liquidity grab. You could spot it because these two equal highs and this one being pretty close. So this is where the liquidity was. Because these liquidity grabs caused this rally down. The bigger the rally down after the liquidity, that means that the liquidity is pretty significant and you should have an eye on it. So I was able to catch this short, I think, to this area of 55.87. So it was pretty nice, like 12 points short. And you can see that we just this wake got above, and by the reaction on this footprint, this is the same candle as this wake, just on a range chart. You could see that we got double zero, so that means that 0% were selling at this level, but about 250 were about to buy. So these buyers got positions at this level. And when the candle reversed as a divergence, they got stopped out. And all these, you can see bigger numbers here. So there were many buyers, but they got pushed down and they had stop losses about here. And you can see their stop losses getting triggered because stop loss to buy is a sell. So they sold. And that caused this, I think it was like here, 12 point short. And then we got a reversal, but this was pretty nice short because of the liquidity, and you could use footprint as a confirmation, just because seeing these numbers coming in, and you could see that you had like 12 minutes before it finally reversed. So it wasn't a quick move as it might seem on this chart, but it's a 15-minute chart, so that's why. Also, I just noticed of this liquidity sweep. You can see that it's what this liquidity that caused this huge rally down to these areas where I have my order block, but I will see this high was 4563.789 and this was 6382. So it was really by 0.03 points, but it was a liquidity sweep and it grabbed the liquidity and continued to dump. I'll try to find it on the footprint if I can. This was Friday 15. Okay, Friday. I'm not sure I have enough data for Friday, but I'll see. Yeah, it would have been around these areas, so let's see. Yeah, we can see many buyers here with positive delta and buyers stepping into the market in this exact level. They were trying to push the price higher. They were rejected once, tried once again with a bigger delta. So there were the delta is actually the difference between buyers and sellers. So there were many buyers, but they got pushed down on this divergence and continued to dump by many negative deltas. So that you can use as a confirmation, and it costs like 15 points. This would have been good, sure, but you don't have double confirmation because you don't have the double zero. So that means that there weren't that many trapped buyers, but still good confirmation by these divergences, very divergences, and you could use that as a confirmation. And basically, you want to put your you want to put your take profits on the next liquidity, on the opposite liquidity. So when I shorted here, I put my take profit here because I saw these wicks and this is where the liquidity lied. So I got off here because the market is trying to reach the other side of the liquidity um, for the big moves. So yeah, liquidity. I think it is the one of the most important aspects of my trading system, as well as daily bias, as I find only trades in my daily bias. I don't want to go against it, as it gives me very good confirmation of what is going on in the market. I use daily chart for the daily bias because you can see that, um, for example, here on Thursday we broke structure to the downside, so I was bearish at Friday, and the Friday got, it wasn't that significant, but we got. So only time I was wrong was at Monday yesterday, but I um, got the win because I was fighting for shorts. But the candle actually turned out being pretty bullish. But I won my short because of the liquidity, so you can actually win even if your bias is wrong. But these days I was just bullish, 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 and I got many wins. So this week was pretty fortunate. So I want to see, I highlighted this level of 4595 because this is where the most liquidity, daily liquidity lies. You can see that this week, and this week was around this level, and this was just a few points higher. So there is where I think the market is trying to buy this bull run. It's trying to pretty much reach that liquidity. I'm sorry, I just exited that. Yeah, but what I was trying to say, by this bull run, we can see little to no retracements. You can see that we are trying to catch this liquidity, and then I will be finding for some more retracements or even reversals. But it's possible that we could actually grab this liquidity. This is the most the liquidity that is in the market, and then continue retracing. But I'll just wait and see. For now, I'm bullish, so today I'm gonna look for longs. Today is no news, so it's just up to me what positions I could find. On the 15-minute chart for today, I highlighted some order blocks up and down, but I'll be looking for retracement to this down order block as I'm bullish, so I want to see the price bounce off it. I highlighted the overnight high here. It's moved kind of up, and the overnight low. I'll be setting up the, well, it's still 4 hours to open, so these levels aren't viable yet. But what I do with these lows, overnight lows and overnight highs, is that I draw a Fibonacci retracement tool with zero point 0.5 and 0.618 levels, and after the open, if it doesn't break the high or low, I find for retracements to this level, and then for buys from here. Also, you can use some tools as a confirmation, as a breakout structure, because if it just dumped here, I won't enter trade. I must see some reversing, some breakout structure to the upside, and then I can enter a position. So yeah, that's what I'm looking for today, and I'll probably update you after that. So this was liquidity. I also want to cover the basics of liquidity. There's also so much liquidity. These 3 weeks stopped at exactly 36.00. 1, 2, 3. So if we ever get down here, I'm gonna look for liquidity sweeps and big moves, because this liquidity and this order block is always just an obvious order block because this rally up. So we will see a big move from there, but we are moving up and I'm bullish. So let's see maybe in the future. And I was also want to cover the basics of liquidity, because liquidity is where the big market makers make their orders. Basically, um, I'll take this liquidity as an example. So breakout traders said that if we're gonna break these highs, I'm gonna buy. So they put their buy orders, buy limit orders, just no buy stop market orders but just let's call it buys for the simplicity of the thing. They say we're gonna buy it if it reaches price above this, so they buy here, so there are buyers here. Also, some people that were in the short from these areas said, okay, if we're gonna break these highs, we're just gonna rally up, so we're gonna put our stop losses. And for a sell to trigger a stop loss, you need to buy back. So there are also buys from sellers. So there are double buys, and this makes the liquidity for big market makers to sell. So when they have that many buys, they can just adjust the market and sell at the level, because the buyers will buy from them and they can sell and make the market go down. So this was the liquidity. We can see also liquidity sweep right here, some reaction of that, but I don't know, we'll see how it reacts. I won't trade because I trade only when the market is open. So that's for today. Thank you guys for watching and see you next time.